In this presentation, we will use tax software to look at the components and schedules and forms that will typically be used for a self-employed individual when filing the taxes on a Schedule C. We're going to be using Lacerte tax software. Lacerte is owned by Intuit, Intuit the owner of QuickBooks. Here we are with our 1040. We have Tim Jones as our mock client. We have the single filing status and no dependents down here. We're going to say that currently we only have the Schedule C income that is put in place. So we can analyze just what is going to be a result of the Schedule C income for the self-employed individual. So if we go then to the Schedule C, this is where the income is going to be reported. Remember that when you think about the Schedule C, you'll note that the top part is going to be the income related to the Schedule C, which we may receive information on, such as like a 1099 forms, but we may not. In any case, this will be the income section. And then down below, we have the expense section, which you can also think of as basically deductions. So down below here, we have, in essence, the deductions for those expenses that are related to the generation of this revenue. And that would make sense because if we were generating $140,000 of revenue and we had to pay $40,000 in order to generate it, doesn't make sense to really tax the $140,000 because different businesses might have different systems on how much the expense or what the gross profit will be or the net income will be. And it makes sense to be able to deduct the expenses related to generating that revenue and then get down to basically the net income, which is $100,000 at this point. That then is what carries forward to be deducted on the 1040. The thing that's a little bit confusing about that is that these expenses down here, this form, the Schedule C, has income and expenses. But when we think about our equation on the 1040, you'll recall that we had an income section and a expense or deduction sections. And so where are we going to put this net number? This net number is a net income. So that net income is going to roll forward to the 1040 in the income section. It's going to be up top in the income area. But just remember, when you look at that 100,000 and you realize that it comes from a Schedule C, then you do have expenses related to it. This net income is net of some expenses, which are in essence deductions, business deductions. So we're going to have the Schedule C. Then we're going to have, and these are all the things you want to just imagine that are going to take place that you have to consider when you have then a Schedule C added to the tax return you're preparing. We're going to have the 100,000 down here. That is going to be supported by the Schedule 1. So here's Schedule 1 supporting that 100,000 that is then rolling forward to the first page of the 1040. This is being supported by the Schedule C. Now, another thing you always want to keep in mind with the Schedule C, you'll note that when we think about the first page of the 1040, ultimately we're going to be coming to the tax down here. We're going to be recording the income tax on it, which in this case is a $10,065. So that's going to be the income tax. That's what the 1040, that's what we think of recording with the 1040 typically, the income tax. However, we down here have this other tax on line 15, which says other taxes including self-employment. And that's related to the Schedule C. So whenever you have a Schedule C, you got to think, oh, okay, we got the income tax. Then we might have the self-employment tax on top of that. So why would we have self-employment? What is self-employment? How is that calculated? What's going on here? Well, that's going to be on the Schedule SE. So the Schedule SE is the self-employment tax. And you could think of the self-employment tax as similar to your payroll taxes. Part of your payroll taxes, if you were a W-2 employee, you'd get a W-2. You'd have some of the payroll taxes, which would include Social Security and Medicare, taken out of the W-2 wages, as well as your withholdings for the federal income tax. Now, that Social Security and Medicare that's taken out is reported on the W-2, and we do have that information that's going to be input when we fill out our tax return, the 1040, but usually it's already been paid, right? It's already been paid by that time because they took it out of the wages and the employer paid their portion. So it's all done at that point in time. It's just an information type of thing. We don't typically have to pay Social Security and Medicare if we're a W-2 employee and we're filling out our tax return. However, if we're self-employed and we're making money, the IRS would like to collect Social Security and Medicare, similar to if you were a W-2 employee, and they do that with the Schedule SE self-employment tax. So the self-employment tax then is basically Social Security and Medicare for self-employed individuals. Now, you would think that it would be matching what you would be taking out of your check if you were a W-2 employee, but it's actually more than that because the IRS sees the owner of the Schedule C as both the employee and the employer. So therefore, when you think about the amount that's going to be taken out for the self-employment, if we were, it would be 0.062. That's how much was usually taken out, 6.2% of your W-2 for Social Security, plus 0.0145. That's how much is generally taken out for Medicare. And then we're going to say that you get the employer and employee portion, because now you're self-employed and you're your own employee, is the way the IRS basically sees it. So times 2, basically the rate is 15.3%. So 15.3% on the self-employment income, basically. You can go through the directions here for more detail on that. But in essence, we get down to the 14,140 then, reported on the Schedule SE. That then is what's going to be recorded on the 1040 page 2, added to the federal income tax. That's added to it. So that's significant, of course. Now, if you think about like a business that was a corporation, they would typically have to charge the employees the payroll taxes that would come out of the W-2 wages. They get a deduction for that as employee expenses, and the employer portion would then be something that they typically get to deduct. And notice we didn't get a deduction. We don't have any deduction down here for the self-employment tax and the employer portion because we calculated it on this other form. So now the IRS is going to say, all right, we're gonna force you to have the employee and employer portion on this form, but we're going to also give you half of that as a deduction, which is basically kind of like the employer portion, which would be similar to if you were a C corporation. And that is going to be deducted not on the Schedule C, but on Schedule 1, which is an above-the-line or Schedule 1 deduction or deduction for AGI. And that's going to be here. So now this number is now a deduction above the line, which is half of the self-employment tax, the Social Security and Medicare, which is kind of like the payroll tax. So then and that's going to roll over to page 1. So if you go back to page 1 then, now we have the Schedule C income rolling forward at the 100,000. Then we're going to deduct half of the self-employment tax that's rolling forward from the Schedule 1. That brings us down to the 92,935. We then have the standard deduction on this return for an individual. That has nothing to do with the Schedule C. Everybody gets the standard deduction. This one happens to be for the individual. And then we also have this qualified business income deduction. And you can do more research on this deduction on Form 8995. It's more of a newer deduction. It's one you want to always keep in mind if you're going to be doing a Schedule C. Then you got to think about this item too. It's going to be an added item to it. Here's a worksheet for it. And so that's going to be included as well. So the 12,002 plus the 16,147 comes to the 26,347. The 92,935 minus the 28,347 comes to the 64,588. That then is what we're going to be calculating the tax on. So if we go to page 2, we're calculating the tax. The federal income tax calculated in this case at the 10,065. And then you'll recall, of course, that we have that self-employment tax of the 14,340. So we got to keep all those things kind of in our mind whenever we add the Schedule C. It adds a good amount of complexity to the tax return.